From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for April 3rd, 2018. Today we're going to take a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. There is a lot going on this chart, a lot of lines and objects and information. Let's go ahead and try and dissect a little bit of that today. First off, the vertical red line, that is January 11. So everything to the right of the vertical red line has been since January 11, most of 2018, this year. We have been in somewhat of a range. If you look at the black box at the top right-hand corner of the chart to the right of that vertical red line, we've been stuck in that range. In recent weeks, we've seen a falling pattern within that range. If you look at the black trend line here, you can see the highs getting lower and the lows staying fairly steady. Let's go ahead and highlight that a little bit differently. Let's throw in a triangle shape, just connecting to the high and low of that pattern, and let's pull it out here like this. So that's the triangle shape that we're looking at. You can see the falling highs along the top of that triangle pattern and fairly flat and steady lows along the bottom of that triangle pattern. So now that we see that, I'm going to go ahead and take it off to make it easier to see the candlesticks, but I think that highlights it pretty well. We see a falling high pattern, descending triangle, if you will, here within the range since January 11th. Of course, we had the previous blue trend line and all of the historical support resistance here. Taking Fibonacci from the lowest low on the chart all the way down here at the very bottom underneath the lower black box, blue zone, all the way from the 6780 level all the way to the top of the chart, highest high on the chart. Fibonacci in that range puts the 0.382 Fibonacci retracement level, bottom of that triangle at 7186. Bottom of the green zone, bottom of our range, and the bottom of that triangle. So that's the 382. Breaking through there, of course, we'd see the market go lower. Staying above it, we've been seeing support and the market bouncing back up within our descending triangle pattern and the bottom flat portion of that triangle. So all that to be said, as we approach the top of that triangle, I'm going to zoom in one time. We're looking at potential resistance, the falling trend line, the falling descending triangle pattern. We're looking at potential resistance into the blue shaded area. That is between 72.55 and 72.70. That's the blue shaded area here. You see these blue boxes here on the chart. The blue boxes represent this period of congestion that's been duplicated before. We've seen it happen before, where we see support at the green zone, some resistance at the blue zone, eventually breaking out, going higher, came back down, support at the green zone, resistance at the blue zone, eventually breaking out and making our second resistance high, then came back down. And for the past several weeks, we have been just stuck in between the green and the blue shaded area. All that again to be said, if we're looking to do anything, buying right now may be difficult. Buying under the blue zone at the top of the descending triangle may be a difficult proposition to buy right now. Low risk, if you're looking for lower risk and higher reward. The only real reason you would look for a long shot here on the New Zealand is it breaks above that triangle pattern. So if you're looking for the long shot, the buy here for the New Zealand dollar, I think you need to wait for the break above 72.70, 72.75, above that blue zone, above the top portion of the descending triangle if you're looking to go long. Otherwise, a short into 72.55.70, the blue shaded area, becomes an opportunity for the day today. Our stop loss, our risk is above. That way, if the market breaks the triangle pattern, breaks the blue zone, we're no worse for wear. We take a little bit of a lump and we get out of the trade. So we're looking for the short opportunity as it approaches that blue shaded area. 4-hour time frame won't change that much. It just gives us a little bit of a closer view. In the past several hours, we've seen the market rally and rise towards that blue zone. That's good. That gives us an opportunity to sell at a higher price. Selling at a higher price provides lower risk and higher reward. Now, the risk is the momentum carries through and breaks through. So we'll watch for clues and evidence of reversal here from the blue shaded area. But I believe this is the area that we want to make our trading decision today. Either it's going to bounce off and turn around and go back down in the descending triangle pattern, or it's going to break through and change the pattern back to the upside. As long as it's underneath it, I don't think buying's a good idea until it breaks through or gets above it. And more likely, you're looking for a short opportunity, some infusion of sell orders from the blue shaded area, 72.55.70, for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.